Here it is. I don't know whether that shows.
For those who can't see, I'll show you on this camera right here.
Card-carrying capitalist. And
this is what you carry in your wallet.
yeah, and I think we will have some of those available at the annual meeting too for our shareholders.
Warren, mate, it's absolutely fine. I've got the dip. It's going to be fine.
You're an idiot.
What?
He means buying the dip in the stock market.
Ah, buying the dip in the stock market. I just thought his name was Warren Buffett. Buying the dip is primarily a trading term, but it is defined as this: purchasing an asset after it has dropped in price. The hope with this strategy is that the new lower price represents a bargain. Buy the dip! Buy the dip! Come get your dip! Buy the dip! 2 for 1 on the dip. Come get your dip. The belief with this strategy is that the dip is only a short-term blip. Rhyming, spitting bars there.
Yeah.
And the asset with time will actually bounce back and potentially increase in value. So in my opinion, buying the dip can actually work, but it must meet these certain criteria. The asset that you are buying must not be worthless. So by this I mean if the asset has fallen in price due to market conditions instead of, let's say, an accounting scandal or any other scandal, or just bad results. Because the latter could actually be really, really bad for this company and this stock. For example, in March 2020, when the Rona hit, the markets crashed. A lot of companies in the airline sector lost a lot of value in their shares because nobody was flying anywhere and there were restricted borders and restricted flights, etc, etc. So in other sectors where they weren't actually impacted directly, their stock price still fell. So these are the ones that you can actually take advantage of. For example, Apple didn't have as big an impact as, let's say, American Airlines or EasyJet or any airline. Although Apple had to shut their stores, they could still sell online, which is where the majority of their income comes from. Whereas airlines are actually losing money if they don't have flights in the air. So it's really bad for these companies, whereas Apple is not so bad. The second condition is this must not be your only strategy. You shouldn't be waiting for the dips. If you're only buying when the stocks dip and when there's a dip in the market, then you could potentially miss out on big gains, and there's potential for it to go completely wrong because you are essentially timing the market. You need to have your set amount that you invest every single month, every single day, every single week, and just let that automatically happen in the background. And then if you have some extra cash, then you could potentially deploy that. But I would focus on getting it automatically done, dollar cost averaging, and just letting it do the work for you. And for me, I'm a big believer in diversifying everything. So not being wholeheartedly on buying the dip, not being wholeheartedly on dollar cost averaging, doing a mixture of both and doing a mixture of every investment strategy, taking the good bits out of some and removing the bad bits out of the others, etc. to make the ultimate investing strategy. So those are the conditions that must be met in order to buy the dip, in my opinion. But what is the biggest risk of buying the dip? Double dipping isn't one of them. The biggest risk of buying the dip is that it's not actually temporary and it's on a long range decline. We don't want that. There are also other risks of buying the dip, which include not actually buying the dip, because you don't know where the bottom of the dip is actually going to be. So you might buy it halfway up and then it will continue to go down, and then you'll be like, should have waited. And then that just plays into time in the market and not investing properly, in my opinion. However, if you did decide to cost average, so instead of putting £500 in at one point when you think it's at its lowest in the dip, you could put £100 this day, £100 the next day, £100 the next day, and most likely you will reduce your overall cost average. You buy it when it's up, and you buy it when it's down, and you buy when it's in the middle, you buy when it's up and it's down, but the overall cost average tends to be somewhere a little lower than potentially if you bought wrong into the dip. And the reason that dollar/pound cost averaging is so good, because it takes out the emotion of investing like an emo ex-girlfriend. So yeah, buying the dip can actually work, but I don't think it is the best method, because let's call a spade. Buying the dip is trying to time the market, and this is pretty darn impossible if you ask me. So what are the other options? Well, I can think of one which we already mentioned: dollar cost averaging. A study was done by Marc definitely butchered that we move forward. His article was published on Medium, and I'll leave a link in the description if you do want to go read and do a bit further investigation into buying the dip versus dollar cost averaging head-to-head thing. So what he decided to do was to compare the S&P 500 for the last 100 years, buying the dip when it went 2% down on a single day, and dollar cost averaging. So sorry to spoil the ending of the riveting article, but in conclusion, he found that dollar cost averaging consistently outperformed the buy the dip strategy. So while the premise of buy the effing dip is actually a good one, like Warren Buffett said, allegedly, I personally think that it is too difficult to get right. It's impossible to time the market, so you might as well just dollar cost average, sit back, let it invest, and do the work for you. You can go and live your life. And as an accountant, I know what it's like to live in the spreadsheet because I do it for a job. And also I do it on my spare time sometimes too. Don't tell Ruby. Anyway, I joke. In conclusion, buying the dip does actually work. But for me personally, I think dollar cost averaging works a lot better and actually outperform this method of buying the dip. So do with that information what you please, but if you did like the video, then make sure to like that smash button. And I'm not a millionaire, but I'm trying to help you become one. So peace.